The following is an excerpt from an askSlim member video. Subscribe to our channel on YouTube and share it. We put tons of new videos out every week. Like this video, give it a thumbs up, and follow us on Twitter at askSlim. Email matt@askSlim.com and request a demo of our technical analysis services, trade planning tools, and amazing video workshops. Our services support all trading and investment styles. Please do enjoy this video. Special report, June 12th, 2020, U.S. stock market. What was last March, where it was my week off, and the market moved down in a huge way, and I did a special report, several of them actually, on the stock market. Well, here we are this week. This is also my week off, and there's no Market Week show today. And based on the decline that we saw in the market, that huge break that we had of some 6-7% down, I was called back in here to do a special report on the market because there are, of course, inquiries about what this means. And I wanted to share analysis with you on the stock market. This will just be a brief video, just a little bit of a catch up here, so we don't go a whole week without me making any commentary, especially to my members. So we had this very big break in the stock market, and I think it's meaningful, and I'm going to show you why. We're going to do this update for members, and then this will be we're going to look at the VIX and the S&P 500 weekly and daily charts. And for our members, you'll be able to look at our revised charts in the NASDAQ and in the Russell that we have posted for our level 3 in the Slimulator ranking system, and level 4 members do get our live charts for the Thinkorswim platform. So you'll be able to catch up on that. But this is only going to be looking at the S&P 500. We'll keep it brief, and I think it's really important. Of course, the stock market had a huge rebound. The volatility we've had has been pretty incredible after that big break that we had, and then the market coming back over 42%. And at the end of that rally, there was some crazy speculation. So things like I haven't seen, where we have bankrupt stocks that are going up 500 or 1,000% in a massive speculation by the small traders. And then, of course, we have this huge up spike going on in several areas of the economy in the COVID-19. We've had a ton of gatherings going on based on the civil unrest that we're seeing, and a lot of people just wanting to get out of their houses. And you've seen many videos and pictures of people out there without masks, really close to each other, and that big spike is going to cause a problem. And what I read is it could get worse into the fall. Then again, we have all of this civil unrest, and that has the markets concerned. I'm not going to really speak more about that right now. I want to keep this about the technicals. And now we're setting up for what I believe to be a huge wave of insolvencies in the corporate world here. The government trying to do everything they can to hold that together. But even the commentary out of Powell this week was reflective of his thoughts that what they could do still was limited, but they were going to do everything that they could. And the unemployment rate that we saw was really false. And he even admitted those numbers could be much higher. So while there is some flattening out of the continuing claims for unemployment, overall the background is horrible. So we've had this stock market that's looking past all of that and able to put on this massive rally, with the NASDAQ making it to a new high, an all-time high. Just an amazing thing that we have here. And the other indexes lagging somewhat, but the S&P 500 did get close, over at 78.6%. So we're going to look at this, and I'm going to give you an evaluation that is in alignment with what I've been saying about the expectation for a sizable decline in the stock market in the summer. And we believe that the decline that we had on Thursday of this week, on June 11th, is actually the beginning of that. And I'm going to show you that in these cyclical patterns and do a little teaching in here about what cycle analysis is. Before I get into the chart, for those of you that are new at cycle analysis, it's essentially the heartbeat of the market. We look at for the rhythms, for identifying repeating patterns, and cycles are measured from low to low. And we have a workshop on cycle analysis you could see by going to askSlim.com and looking under the workshop tab. So let's take a look at what I think is a very important chart, because we showed this in our Future Speak video last week, and this is the VIX chart with cycle analysis on it. For those of you that don't have a trained eye, this probably looks pretty messy to you, but it really has some fantastic information on it. Let's go back here and look at the weekly and talk about what we have in here. So the green highlighted areas are the first quarter cycle. So these are quarter cycles right over here, the minor cycle that we call that. There's an intermediate cycle right over here on this weekly chart, and a dominant cycle that you can see right in here. So when the dominant cycle ends right over here and implied volatilities go down, in other words, the stock market goes up, you get into a period then where these green areas come, where all of these three cycles are lining up on the upside. And that's when implied volatility goes up and the stock market goes down. So this was right over here in the July-August period. And this that was in 2018, and then you could see each of these upward spikes as each of these represented a time period where the market fell in 2018. You know, we had a pretty good decline at the end of 2018 when the Fed was trying to taper, you know, to tick up on interest rates, and the market had a big break. And you see the applied volatility went up to about 36 right over there. Then you had this period in here where the market did better, and then right over here set up in May or so of 2019 that the market started to pull down and VIX implied volatility started to move up. So right over here at the as we were getting into February or so of 2020 is when I said we're entering into this next period right over here where the stock market was likely to go down and implied volatility's up. Well, I had no idea it was going to be that intense on the upside, and the stock market was going to have the 35% panic that it had on the downside. So we had this huge move up here to implied volatility is about 85. And then it settled down as the market had this big recovery and got under the 25 area right over here. Now, I had talked about that we were within a couple of weeks of the next upward spike in implied volatilities as we got to the end of this period right over here where the quarter cycle and the intermediate half cycle nest. This came a little bit earlier than I expected right over here. But this to me signals that the stock market is entering into another significant correction, which I'm going to show you, I believe, goes into the end of July or beginning of August. And that's this quarter cycle right over here peaking and then coming down. And that's probably going to be the worst of it for the summer right over there. So this is a good look at implied volatilities on an intermediate basis. And the rally in implied volatilities, that uptick, was a little early but due, and that signals a pretty important period of rising implied volatility. So if we get some market rally, that it's likely to get a continued opportunity to buy volatility, because I think the first week up is not going to be the peak, and we're going to go through quite a number of weeks of rising implied volatility. Now I want to show you the daily chart right over here and expand that for you. And this is just amazing repeating patterns that you see here. So I'm looking back in here, and I'm going to go back to this one right over here, and you could see the perfect cyclicality and implied volatilities. As you get the rallies as they're supposed to come on these daily charts, this big upward spike, the decline almost dead on to the date. We were looking on the daily chart for implied volatility to bottom. In other words, the stock market to top. Very, very perfect spot right over there. And now we're in this period of rising implied volatilities. Now the stock market has tried to rally here on Friday, and it was up a huge amount. Dow up about 700 points. It's now given that up, and you can see implied volatilities are going higher yet today. So we're in a period of a lot of risk for the market with a potential bounce coming, and I'm going to show you that. So now let's move over to the S&P 500, SPX, and I'm going to put up the weekly chart. Let's get this up where there's some clarity on all of these drawings. So we've had this up forever, right? This yellow oval note right over here that says the yellow ovals are the corrective areas of nested cycles. That was like right over here and right over here, and we called that one right over here just before the big break, and that's where we are right now. And you see the stock market having this massive reversal right over here, and this is coming pretty much on time for our belief that there was going to be a big summer decline. Now our projection down over here is to about 2820 on the S&P 500. And that is towards the end of July or beginning of August. That's that alignment that we showed you in the implied volatility peak. Now, it could easily come down to this level of about 2650. I don't really think it's going to be worse than that, though we're in a time period where there's a lot of risk right over here, and you see this big engulfing right over there. That's a big top. This big top was with a big gap down, and there was a gap down here in an island I'm going to show you as it shows up during the day in the daily chart. So our projection is for a declining market in through the summer, getting you into the end of July to the beginning of August, where these cycles nest all down over here. That major big blue dominant cycle that has brought some significant lows right in here and here and here, and all of those smaller cycles that are aligning up right over here. This is around July 20th. This is around August 10th. So that's our projected time range for the low in the summertime. Again, 2830 potentially down to 2650 that we see in the S&P 500 over these next weeks. So this is now June 12th. That would mean about 6 to 8 weeks of downside risk here in the market, and that could be pretty significant. Now, we're going to go to the daily chart. And I know there are so many of you that follow our cyclical analysis, and you could see the repeating patterns in here that are just amazing. So this dashed line is set at 18 days. These cycles have ranged 16 to about 22 days, and an average of about 19. So this is now set on 18, the minor cycle here on 9, because that's about the averages we've been running lately. And you can see in here the perfect cyclicality, and rising here as the momentum gets strong and continues to be in positive momentum, but it's threatening to lose that momentum right now. So the likelihood of a bottom right in here is high, and then another rally. Now you see when the market broke right over here, it then rallied into the sell zone, which we have in here, the minor resistance. We don't have an anchor point yet because the market is still falling. So I've sent out new charts to our members, but I'm going to have to update that again because that resistance is declining. But this rally right over here is similar to what I think we're going to get right over here. And then the market turned lower again as it did right over here. So because this cycle is peaking on the weekly chart, let's look at the side-by-side right here, that gives the highest probability that this next rally right in here will fail and then turn down. In other words, the energy that was pushing the market up is dissipating. How do I know that? Well, I know it by this size of this decline right over here, something similar to what went on right over here, but not quite as extreme yet. And it says to me that there are quite a number of weeks over here and that these rallies will fail here on the daily chart. So when I look at that right over here, you can see that what we're talking about is this bottoming right in here. It might be today, it might be Monday morning, and then starting to turn up. and then it failing in wherever this resistance is right now. It's declining at the moment. It's a little lower than what you see here. And then you could see there's a support right here on the intermediate 26% fib. That's at around 29.80 approximately. And then way down over here at that 26.30 level right there. So, I'm sorry, 28.30 level right there. So this is a bottoming area in the support, and we rate it a buy zone because this is still a bullish cycle where you have the bullish configurations, higher bottoms, higher lows, a low do right over here, and then a rally do. I actually don't want to buy this because I think that this rally is going to fail fast. And if you want to buy it, I mean, you only maybe have a number of days to be able to make the long side trade here. And you can see it's getting dangerous to be on the long side. For those of you that are wondering why these are green when the market is declining, it's because the programming in the slim ribbon shows you when momentum is positive. So momentum is still positive here, but you can see this 8-day moving average getting ready to cross over. And if that happens, this upward momentum will be lost, and we will be out of this positive period that have been reflecting all of these buys over here in the projection oscillator, which works along with the slim ribbon. So there's a buy pending right over here that you can see, a upside rising phase due right over here, and what we believe is going to be the end of that. Now, what are the potential rally areas? Well, at the bottom of this area right now, it's declining, so around 30.80. This is approximately 31.10 right now, I would say. It says 31.15, but that's about the best we can see. Now, we're projecting it way up here to the 78.6. It's really not a high probability, in my opinion, based on the fact that we have an island. Now, lots of people look at the gaps and they say, well, you got to fill the gap. You know, there's a gap here. You look for the gap fill. You look for the rally that will get up there all the way to 31.80 to be able to fill that gap. Well, I'm telling you that I don't think this gap is going to get filled. And I don't think it's going to get filled until, if it does get filled, towards the end of the year, or if this is a full-fledged bear market like I think, then it may not get filled until 2022 or 2023. So yes, I'm giving you a pretty pessimistic look. But that island is important here, and the engulfing pattern that you see on the weekly chart is important right over there. And that says intermediate top. Intermediate top says this next rally fails, and that we get into this declining period that you see right over here, aligning with this. There will be another cycle out over here that you can't see right now because that is this cycle right over here bottoms on July 7th. This one over here bottoms on July 27th, which is in line with that weekly chart. So what that points to is that you get a rally, a large decline, another small rally, and then another large decline. If it does set up that way, you probably can get down to this 50% fib at 26.55. So this is important. When I looked at this, I saw this break. I see the island tops. I see similar things in other indexes. And all of the crazy speculation that we've seen in this market moving up with investors and traders thinking that they could buy all kinds of garbage, and that it's perfectly fine to expect that they can look past a valley that may go out for years before there's any recovery of significance. I think it's going to be an L shape or U shape, actually, with the bottom of the U lasting out until, well, 2021 maybe. So this is a picture of cycle analysis that has been beautiful, and absolutely with the VIX telling us of a market decline and these tops that you see formed in here, it makes a bearish case. Remember, I am bull bear agnostic. I will only bring you that which I see in the charts. And when the charts have an alignment like this, it to me says I really have to bring something like this special report here today to give clarity on this. So I showed you the VIX, I showed you the implied volatilities, and I showed you what I thought were the what is the analysis based on the cyclical patterns and other momentum conditions that we see changing in here. And after a 35% decline and a 40-something% advance and new high in the NASDAQ, we're in a period of historical volatility. If I'm right, and I think it's a high odds that I'm right, that the stock market is in a decline for the next 6 to 8 or 9 weeks, don't be surprised if the downside is bigger than anybody thinks. Where it's you had a bear market, you had a bull market, that's what they're rating it. Maybe you have a bear market again. This decline will be over 20% on the downside, and then everybody will be totally confused by that. So I think we're in a period of a lot of risk over these next couple of months, and I think that if you buy these dips and look for the rallies, and you think that they're going to look like they have the last several weeks, you may find out that that isn't the truth, and that declines will come pretty quickly. I'm looking at what happened here today, and the market, S&P's up 60, 70 points, and now as I'm doing this, the futures are down 20. So we haven't made the low yet. I'll be sending out new charts to our members again, because I need to lower these projections, and when I get an anchor point, I will have a sell zone in there, because I think that next rally is going to fail. I do hope that you found this to be extremely informative. If you are seeing this on anything but our member sites, like on YouTube or anywhere, please do subscribe to us on YouTube and give us a thumbs up, and also become an askSlim member if you're not. Support our team. We have 4 different levels of membership, so please do look at that. That's it, and I'll see you next week when I'm back from vacation in our next coming segment, which will be in Future Speak on Wednesday. Thanks a lot for listening. I hope you have a great, safe weekend. I'm always wishing you great trading.